How are we doing, Incock family? Hope everyone is keeping well, keeping safe, and trading safe as usual. So, today's little topic is high value regions to trade from. So, I guess it's essentially picking a POI. Yeah. Now, we go through all these, sort of different regions to trade from, i.e., a POI that's swept liquidity, that's done this, that's done that. And all of that is well and good. Yeah, that's completely fine. However, I think it's important to not forget one of the most high value regions to look to trade from, which is simply the extremes, right? So this is somewhere that I would definitely always have an eye on. So the reason being is, or sort of my sort of thought process anyway, if we break structure here, yeah, this is the high, and let's say this is the low that's been made, yeah, and we pull back. Now, this is essentially what we refer to as our strong low, our strong high, yeah. So essentially, this should hold, and we should, in theory, take out the weak low, which is here, yeah. And I've done videos on strong and weak highs. I'll put a link to that on this video somewhere, yeah. The thing is, going with that sort of theory, the extreme is essentially the last place that has to hold before this move becomes sort of invalid, right? So if you break and close above the extreme here, then this whole thing becomes invalid, right? Therefore, I'm happy to be looking to position myself in from these extremes. Now, sometimes what's going to happen is you might get triggered in, and we might move. Now, sometimes this happens, right, which is what we expect to happen, following an expectation order flow, so on and so forth. But sometimes what happens is we'll get a reaction, and price will come take us out. Now, depending on how you trade, this reaction, right, is more than enough, right, a lot of the time. You don't need to always go for the home run, which is for this break of low to happen in order to profit. Yeah, so let's have look at a couple of examples here on EU, and as always, just keep an eye out, test it, see if it works. So if we literally look at this example here, here's one whereby we had this high, pull back this low, and we then, let's say this was the break swing structure. This extreme here, I'm just going to roughly draw out my POIs here. It held, and what we see is we had this follow through, which is a breaking market structure, right? Which then leads to this extreme, right? Let's draw it out like this. This here, breaking structure, and putting in this high, yeah. And when this price comes back into, it comes back into this extreme. Now, of course, you can add more confluence to this to make it even more powerful. But I'm just saying, if this extreme breaks, if we get a break close below this extreme, then buys at that point becomes counter trend, right, to this time frame, which is here on the 15-minute, right? But in this case, we've got liquidity, the form of structure liquidity, we've got imbalance, so on and so forth, into the extreme. And this is what we have to sort of understand here, and it comes down to risk management. Like I said, the target is for price to break and continue with this bullish order flow, right? To basically break and close above this weak high. However, we get pretty much, let's see, we get a good 155 pip reaction, which is more than enough, depending on your risk management, to profit from the market. However, what then happens here is we go ahead and get a breaking market structure to the downside, which is completely fine. Yeah, like I say, we don't need to go for the home run. I'm just literally doing this video to show you guys that these extremes are not to be forgotten about, right? Not to be forgotten about. We're always kind of, trying to pick up POIs that swept liquidity, that did this, that forms part of a chain, whatever, right? And all of that is good. But I'm just saying these extremes are always good regions to look to trade from, to look to position yourself in from, right? So then we get this breaking market structure, meaning this is now the high, right? This is the high which put in this low, yeah? And if I literally just take this extreme wick here, right, and drag it along, and what do we have? We again have a solid reaction, right? Yes, it didn't continue and fulfill that bearish order flow, right, after that initial breaking market structure, but we have around, let's see, around, more than 100 pips to look to profit from trading from this extreme, yeah? And yes, we then switch back to bullish, so on and so forth. That's for another video. But I'm just saying these extremes, guys, are not to be forgotten about, right? They are very powerful, yeah? And one of the reasons being is it is literally the last point that has to hold for that swing range to basically be still valid. So that's it for me today, guys. Just quick little reminder to basically not forget the basics, yeah? And the extreme, we always get caught up in picking the best POI, this POI, that POI, and really there's not such a thing, right? We just have to accept the fact there's not a perfect POI, yeah? But the extreme to me is always going to be in the books, yeah, because it's, like I said, it's the last place that has to essentially hold for that swing range to be valid, yeah? So as always, if you've got any questions, just get in touch with me, and until next time, trade safe.